What's up, YouTube? It's the Financial Chapter back again for another episode. Today we're going to be talking about 5 stocks I'm going to be buying in the next stock market crash. By the way, I'm not a financial advisor. This video is for entertainment purposes only. If you are going to be investing in the stock market, you should do so wisely. Now, stock number 1 is Starbucks, ticker symbol SBUX, or what I like to call SBUX. I don't even. Now, if you haven't heard of this company before, Starbucks has grown into the world's most dominant coffee shop, and it's practically become a part of the daily routine for millions of people. Starbucks has added on to its beverages and now even offers meatless options for people who are interested in plant-based foods. It's already introduced a Beyond Meat cheddar and egg sandwich in Canada and has Beyond Meat products in China now. If social distancing practices stay with us for an extended period of time, it's going to be the companies that are able to adapt their business model to the situation that are going to be successful in the long run. And guess which company that would be? Exactly, Jimmy Jazz. On a serious note, Starbucks has already dealt with this issue in China. In fact, more than 98% of Starbucks' stores are now open and operating under certain guidelines in China. And I'm willing to bet that the same thing is going to happen in the United States. Actually, it's more than a bet. Starbucks actually said that they're going to be opening their stores in the United States. This month, about 85% of Starbucks' stores are going to reopen and will focus on mobile ordering, contactless pickups, and cashless payments. And right now, people want to be outside. The weather is getting hot, it's getting nice, people want to go outside, and people are going to end up in that Starbucks drive-thru. Now, if we take a look at Starbucks' total revenue, we can see that it has increased each year starting from 2016. Back in March, Starbucks went all the way down to like $50. At that time, I did not pick up any Starbucks stock. I'm a little upset about that. But the reason being, I was busy building up on a lot of other stocks in my portfolio and creating a huge foundation. I'd like to jump into the stock somewhere around in the mid 60s or lower. If it gets back to the 50s, I'm going all in on that. I see a lot of success for them in the future, and because of that, it's a stock that I'm willing to put some money into. Now, stock number 2 is one of my favorite stocks. It's one of my first stocks that I ever bought, and that would be Disney. Ticker symbol DIS. Disney is practically the definition of a diversified company that operates theme parks, movies, resorts, a cruise line, television networks, and now even a streaming service. Disney operates through 4 main business segments. Its parks, experiences, and products, its media networks, studio entertainment, and direct-to-consumer. Disney's Parks and Experiences segment is basically its theme parks and its resorts in Florida, California, Hawaii, and Paris, as well as its ownership interest in resorts in Hong Kong and Shanghai. In addition to that, it has its cruise line and its vacation club. I actually went to Disney World pretty recently, back in December, and it was one of the best experiences in the world. Even as an adult, that it was just amazing. I went to the Magic Kingdom and saw fireworks, and then I went to Animal Kingdom, which I didn't think was going to be that fun, but wow. Disney's Studio Entertainment segment is where we see all of our favorite movies, or some of the favorite movies that we love to watch as a kid. Today, Walt Disney Studio owns Pixar Animation Studios, Marvel Entertainment, and Lucasfilm, which is like the Star Wars series. Now we get to look forward to new movies that are going to be releasing, such as MULAN, Black Widow, New Mutants. I don't know what they're going to do with that, honestly. I don't know if that's supposed to be to introduce the X-Men. Spider-Man Far From Home sequel. Stephen A. Smith's new movie, Soul. Nobody can't tell me that's not Stephen A. Smith. That looks just like him. Doctor Strange. Thor Love and Thunder. Guardians of the Galaxy Volume 3. Did I mention Mulan? The Blade reboot. Black Panther. And those are just to name a few. Disney's third business segment is its media networks. This is the most profitable division of the company, and it accounted for about 40% of Disney's total global revenue in 2018. The media segment deals with networks such as the Disney Channel, ESPN, the History Channel, the National Geographic Channel, A&E. I ain't never watched that channel before, but shout outs to that channel as well. And I didn't even tell you about their latest venture, which is probably keeping them afloat at this point, and that's Disney Plus. That would be in Disney's direct-to-consumer business segment. Disney's giving us a trifecta for $13 a month. That's the same price as Netflix. You got Disney Plus for your kids and for people that just want to watch nostalgic. Okay, we're back. Now Disney Plus, more than 54 million people are now subscribed to Disney Plus. And it's looking like it's gonna continue to grow, especially in the situation we're in where everyone is at home. So just briefly, let's crunch the numbers on Disney. Disney has a market cap of $196 billion right now. Its PE ratio is pretty high at 36, and it actually recently just cut its dividend. Personally, I think it's a good move that they cut their dividend. I don't think this is going to be a long-term thing. I think that Disney is going to be bouncing back in the next few years. But right now, their parks and entertainment segment, which gives them the most revenue, is actually suffering the most. Nobody can go into their parks. It only makes sense that they hold off on giving a dividend until things start to get back to normal. Now that doesn't mean that I'm gonna buy it at the price that it's at right now. I'll put it this way. If I can get Disney in the very low 90s, I'm gonna start buying little by little. If I can get it into the mid 80s, I'm just gonna start buying it. I'm gonna start building out this portfolio. And if I get it into the 70s, it's a wrap. We'll see what happens in the near future. If we do get another stock market crash, it's highly likely that I'm going to end up picking up a lot of Disney shares. Now, stock number 3 is Johnson & Johnson, ticker symbol J&J, or what people refer to as J&J. Johnson & Johnson is a giant in the healthcare industry. You probably know and buy more Johnson & Johnson products than you realize. Everyone is already familiar with the Johnson & Johnson baby powder and baby shampoo, but the company is also behind Listerine, Neutrogena, Benadryl, Tylenol, Band-Aid, and even more. One of the main reasons why this stock is such a favorite among investors is because of its diversification in the healthcare sector. Its pharmaceutical business makes up about half of Johnson & Johnson's pre-tax income. The medical devices segment sells products in areas such as orthopedics, surgical care, cardiovascular care, specialty surgery, diagnostics, and hospitals. And last is Johnson & Johnson's consumer products/health section. This makes up about 10% of Johnson & Johnson's pre-tax income. Now, Johnson & Johnson has a market cap of almost $400 billion. Just recently, it raised its dividend and now has a dividend yield of 2.74%. I already own Johnson & Johnson shares, and it makes up about 7 to 8% of my stock portfolio right now. At the numbers that it's at, being that it's at like $150, I don't see myself buying it right now because it's very close to its 52-week high. But if its share price goes back down into the 120s, I'm definitely going to start adding heavily again. Now, stock number 4 is PepsiCo, ticker symbol PEP. Now, let's just take a look at some of the top global brands that Pepsi owns. We have Lay's Classic, Mountain Dew, Doritos, Gatorade, Tropicana, Quaker Oats, Lipton Tea, Aquafina, Cheetos, Tostitos, Sierra Mist, some Starbucks drinks, going back to the number 1 stock on my list. Now, Pepsi has a market cap of $189 billion. It also has a dividend yield of 3.07%. I do not own any Pepsi stock right now. I plan on doing so in the near future. If there is another dip, I will be making that a significant portion of my portfolio because I do enjoy the company and I think it's something that will stay long term. And last but not least, one of the stocks that I've been looking at for quite some time and I decided to jump in back in March when that joint went all the way down to like 140 or so dollars is Facebook. Facebook is the biggest social media platform in the world at this point. As of the fourth quarter of 2019, Facebook had more than 2.5 billion global monthly active users, and then a cumulative total of 2.89 billion users that were using the company's products on Facebook, WhatsApp, and Instagram. Facebook now also has a virtual reality segment of its business called Oculus. Now, Facebook primarily makes most of its money by selling advertising space on its social media platforms. These ads are displayed on Facebook's main social networking site, as well as Instagram, Messenger, and other third-party affiliated websites and mobile applications. In 2019, Facebook generated $70.7 billion in revenues, most of which came from advertising sales. But let's not be mistaken here, Facebook isn't the only company that does this. So it has a lot of competitors that sell to marketers as well. These companies include Google, YouTube, which is owned by Google, or Alphabet, the parent company, Apple, and Amazon. All of these other companies sell these advertising spaces on their platforms. Facebook has a market cap of about $600 billion. If we look at Facebook's income statement, we can see that its total revenue has just continued to increase over the years. But what's most attractive about Facebook is actually its balance sheet. Facebook's total assets is $133 billion. Meanwhile, its total liabilities is around $32 billion. Just this weekend, Facebook announced its plans to purchase GIPHY. It's actually planning on paying $400 million for the image sharing company. And what will happen is GIPHY will integrate primarily with Facebook's Instagram platform. Not only is Facebook purchasing GIPHY, but it's teaming up with a handful of telecommunications companies to build a huge subsea cable to bring internet access to Africa and the Middle East. I don't know if I'm all too into Facebook going into Africa though. I'm gonna be honest with you. Wakanda is good. We're good here. But anyways, the project is going to be called To Africa, and the initiative will be one of the biggest subsea cable projects the world has ever seen. But that's not to say that Facebook does not have its issues. The company is facing 4 different antitrust investigations, including one by the United States Department of Justice, one by FTC, and I'm not talking about the financial chapter, I'm talking about the Federal Trade Commission. With that being said, I definitely plan on investing more into Facebook. I would love to catch it on another dip. If it gets back down into the 150s, I'm going to be grabbing up a lot of these shares. So these are the top 5 stocks that I plan on getting in the next month or two. Thanks again for watching. Like, comment, and subscribe the video. It really does help the channel. And leave a comment down below on which stocks you plan on investing in as well.